Hello all. Today we are going to have a overall overview of all the syllabus which is coming under cost and management accounting, and it will help you for your exam purpose of view and for preparation for your semester exams. So I would like to give all introductions, and I would like to brush up all the topics which we have discussed already. So this video is about to tell you on how to prepare the formats and what all important questions will come from each topic and so on. So before going to the elaborated discussion on all the topics, I would like to discuss on what is the meaning and what is the purpose of learning cost and management accounting. So cost management accounting, as you know, is a form of accounting that aims to improve a company's profitability by managing, controlling, and eliminating all the expenses. So cost and management accounting provides data and analysis reports that can be used by managers to make decisions. So in simple terms, if you would say, cost and management accounting is a type of accounting which will help you to make accounting decisions or managerial decisions for your future analysis purposes and for your development of the company. Okay, so that will lead to a long-term profit and growth of the company as well. So according to your syllabus and coming under Bardiyar University, we are going to have an overview on the first 3 units, and under the first unit you will have all the theory sessions or theory topics related to cost and management accounting, and it will also discuss about different elements of cost and cost concepts and other classifications. But while coming under unit 2, we will discuss more about preparation of cost sheets and different pricing methods or different material issue methods like FIFO, LIFO, average cost, standard cost, labor cost, everything. And under unit 3, you will discuss about the financial statement analysis, under which we will learn or see about what is comparative and common size statements. And after that, we will see about what is ratio analysis and different types of ratio analysis techniques that are available. So I will discuss each and every units. The overviews will be given, and I will also state what are the important questions or repeated questions coming under that unit. Okay. So under first unit, theories based on cost accounting and management accounting is the important thing which you have to learn while for going for a semester exam, and the most important or frequently asked questions from that unit will come like this, that is define cost accounting and explain its objectives. So while a question comes like this, you are supposed to write the meaning and definitions of cost accounting and the main purpose or objective of using cost accounting in any organization. Okay, and secondly, you will have to learn the difference between management accounting and cost accounting, and also you have to learn the difference between cost accounting and financial accounting, so that it will help you to deal with all the theory questions coming under that. And after that, you have to learn the importance of cost accounting, costing as well as accounting separately. And one other important question which is frequently seen in the question papers are, while financial accounting is an external accounting and cost accounting is internal to the business, explain. So this is easy. You have to learn about the difference between cost and financial accounting, so you will get the points which are to be remembered. And as I told you, this cost accounting or management accounting is always an accounting or a type of accounting which is helping the managers to take managerial decisions. So that's why it is always considered to be an internal accounting system. While you take financial accounting, the financial statements like balance sheets and cash flow statement and every other financial statements are always open to the external parties like public, and interested parties can go through the accounts, and based on that the external parties will make their own decisions. So that is why financial accounting is an external part of accounting. So you have to explain it each and every point clearly, and you have to state the difference between both these accountings, and then you can explain or verify it by the same. Okay, so we already have many recorded videos and materials which is already posted in your Google Classroom. So I have given the link for that material under this, which I will be sharing later in your Google Classroom. So in Unit 1, it is all fully theory-based questions. So if you learn these 5 important questions, you will be able to answer any type of question which is coming under or coming from Unit 1, so that you will be able to answer the 5-mark question as well as the 8-mark question very easily. Okay, so coming to the Unit 2. Unit 2 is an important unit under which you will learn about cost sheet, LIFO, FIFO, simple average and weighted average methods. So before learning that, you should understand the types or elements of cost, and should also be able to differentiate between direct and indirect cost, not only material but all the elements of cost. So for a small brushing up, elements of cost and under cost and management accounting is simply classified into 3 elements. Okay, so that 3 elements are material, labor and overheads. So you have to understand the difference between all these 3 elements of cost, that is material, which will come as raw materials, work in progress and finished goods. And when it comes to labor, there will be direct labor as well as indirect labor. When it comes to overheads is nothing but expenses that are incurring in an organization. So there also you will have direct overheads and indirect overheads. So when you get a question relating to elements of cost, make sure you write about material cost, about labor cost as well as overhead cost, and differentiate between direct material and indirect material. Likewise, you are differentiating between labor and indirect, that is direct labor and indirect labor, with examples, so that you will be able to score more on that topics. And there is yet another frequently asked question based under Unit 2, that is what is work in progress and how do you show it in the cost sheet. So if you get a question like that, you should be thorough in your format of cost sheet. So I have also posted the video which I am explaining about cost sheet format, but I've also given a format here for your better understanding and for a small brush up. Okay, so the cost sheet of so-and-so company for the month so-and-so is the important thing which you have to write before starting any format. So it consists of 4 columns, where the first column is for particulars. So always remember that prime cost is the most important thing or most important cost which you have to calculate in a manufacturing concern. So as I would like to remind you that cost and management accounting is always related to any manufacturing concern or an organization. Okay, so prime cost is the first and foremost cost which you have to calculate while preparing a cost sheet. The prime cost, as the name suggests, it will have only direct cost of material, labor and overheads. So all the direct material, labor and overheads which is given in the question will be taken directly to the calculation of prime cost. Only one thing which you have to concentrate more is that sometimes in your question there will not be the direct answer for a material or material cost. In that case, you have to calculate material consumed from the given data like opening stock, purchase and closing stock. Okay, so what you have to do is take the opening stock of raw material. To that opening stock of raw material, supposed to add the purchase amount of material and also any other purchase charges like carriage inward or any material charges like that, freight inward or carriage inward, and to that amount you're supposed to subtract the closing stock of raw material. So when you do this calculation, that there you will get the total or direct material consumed. To that direct material consumed, you are writing it in the outer column. You are supposed to add the direct labor amount as well as the direct expenses amount. So when you add these three things together, you're going to get the prime cost. Okay. And after you complete the calculation of prime cost, you're supposed to add all the factory overheads. So remember, any item which is related to factory or which will come inside the working of the factory, all those items will be added under factory overheads. So some of the examples of factory overheads are factory rent and rate, power and fuel, factory manager's salary, factory insurance, factory cleaning, cost of research and equipments, loose tools, all those things will come under factory overheads. So relate the items, whether it is an administration item or a factory item or relate it properly, and whatever item is coming under factory or related to factory things or happening inside a factory, all those items will come under this head. Okay, and one important thing which you have to adjust in or under factory overheads is the work in progress opening and closing balance if given in the question. So to any of the expenses, if they have mentioned a sale of scrap, you are supposed to minus or subtract that from the given item. Say for example, there is an item called loose tool as well as scrap of loose tool given in the question. The first thing what you have to do is write the amount of loose tool, and to that loose tool you are subtracting the scrap of loose tool. So that will be the amount you are taking to the outer column. So other than that, if there is an opening stock of work in progress and closing balance of work in progress given in the question, after calculating all the total of factory overheads to the total amount, add the opening stock of work in progress and subtract the closing stock of work in progress. So when you do this transaction, the total amount what you're getting will be the works cost of that company. So remember, when there is opening stock of raw material and closing stock of raw material given, the adjustment is always done in the prime cost. When there is opening stock of work in progress and closing stock of work in progress given in the question, the adjustment is always done after you calculate the factory overheads. Okay, now coming back to the office and administration overheads, any item related to office and administration heads will be calculated here. Say for example, office rent or rates, office lighting, office stationery or legal charges, stationery charges, any one. So add all the items which will come under administration overheads, and to that there will be sometimes an adjustment given for opening finished goods and closing finished goods. So when you add all these items together and when you add it with the work cost, the amount what you're getting will be the cost of production. To the cost of production, after getting the cost of production, you are supposed to add the opening finished goods and subtract the closing finished goods in order to get the cost of production of goods sold. So this should be done only after you find the cost of production. You are supposed to add it. Okay, and now the last item is the selling and distribution overheads. The selling and distribution overheads will relate all the items coming under selling and distribution head. And to that, when you add it with the cost of production of goods sold, the amount what you're getting will be the cost of goods sold. So this is all the adjustments. So after you get cost of goods sold, you are supposed to take the sales amount and calculate the company has earned profit or loss. So this is all about calculation or preparation of cost sheet for a company. Yes. So that is about, or that is the first main thing which is coming under unit 2. So after we prepare the cost sheet, let us move towards the material issue methods, which is coming under the same unit. So the first and foremost or most important and commonly seen material issue method or pricing method is FIFO method. FIFO method means first in, first out. So based on this method, whatever items or raw materials are coming in first, and based on that price only, the materials will be issued outside as well. The second method is LIFO, which is last in, first out method, and according to that method, whatever is purchased last will go out first. According to the prices of the materials purchased last, the sale of items will also be done. So based on the market conditions, the organizations will always choose FIFO or LIFO method. So I have posted the video of a complete explanation on these two methods along with the problem. So you can refer it later. So it's very important to note that it is a very frequently asked question based on FIFO. That will come for your semester examination. So make sure you learn any of these or both the methods thoroughly before going for the semester examinations. And that is all which is very important in second unit. So make sure you learn the format of cost sheet and LIFO and FIFO method. And I would also suggest you to go through the method of weighted average cost as well. Nextly is the items coming under unit 3, which is mostly concentrating on financial statement analysis. So we are going to discuss on some topics which is all commonly dealt in financial statement analysis, and before that I will just brush up about what it means. So financial statement are written records. That is a common thing which we all know. So it's a written record of any company that will convey the business activities and the financial performance of a company. So financial statements are often audited by government agencies. So it's always very good to have, and it's very compulsory to have financial statement which will state all the financial performance of any company. So these statements will be often audited by the government agencies, accountants, firms, etc. to ensure the accuracy and for tax and other investing purposes. So mainly the most commonly seen financial statements are balance sheet, income statement and cash flow statement. So based on these three statements only, the financial position of any company is always mentioned or understood. So this is a complete video link on the uses and theory parts which is coming under financial statement analysis. So as I told you, under financial statement analysis, there is two important type of analysis, which is comparative statement analysis and common size statement. So based on these two statements only, mostly the analysis part is done in any manufacturing company. So the first thing, as I told you, is a comparative statement. The introduction about a comparative statement is as simple that it always compares the figures for the past and future. So it always compares the past figures with the future or the current figures to give or come to a conclusion about a company. So the figures of financial statement are converted to percentages. So the main focus or the main way of presenting a comparative statement is through percentages. The balance sheet items are expressed as ratio of each asset to total asset and the ratio of each liability to total liability. So whenever you prepare a comparative statement or a comparative balance sheet or comparative income statement, always the base is the total asset or total liability. When you do it for income statement, it's always the sales which is taken as the base. So items, each and every items are expressed as a percentage of the base year it is time series analysis. So I would like to show you an example of the format of comparative income statement. So as you can see, it is a comparative income statement. So as I told you, the base is always a net sales. So based on that net sales only, we are going to compare it with the other items coming under income statement. So the video of complete analysis on the problem is also attached. Now the second one is common size statement. So it's a horizontal way of analysis, and it always shows the financial position of company at a different time period. So I just remember it is a bit different from comparative statement. So this is the format of preparing a common size balance sheet. So you can, as you can see, you can take the total asset and total liabilities as 100, and then later. So this is the common size balance sheet format where you are comparing two different businesses based on the total assets and total liabilities. So you will understand it better when you watch the videos which we have discussed on different problems of doing a common size balance sheet. Okay, so the last thing which will come under unit 3 is about ratio analysis. So it's most powerful way of analyzing, and it's very simple way of analyzing the financial performance of any company. So it's always very important and widely used tools for analysis of financial statement, and it is a study of ratio between various items. So as I told you, when you compare two items together, and if you are going to find the relationship between those two items, it is always easy to do it under a ratio analysis or through a ratio analysis. So that is why ratio analysis is the most simplest and most easiest tool used for financial statement analysis. Okay, so under ratio analysis, it's the four main types of ratios will come. It's liquidity ratio, solvency or leverage ratio, activity ratio, and profitability ratio. So under liquidity ratio, they always measure the item's ability to meet the current obligation. So that is why current ratio, liquid ratio, and absolute liquid ratio are some kind of most importantly seen or most commonly seen ratios which will come under liquidity ratio, where it will compare the current asset with current liability and will make or give a result on how this works. So that is why they always measure the firm's ability to meet the current obligations. While in case of leverage ratio, these ratios will always show the proportion of debt and equity in financing the firm's asset. So based on the firm's asset, it will always show the debt and equity in financing term. Okay, and they in the case of activity ratio, they always reflect the firm's efficiency in utilizing the asset. So there are some kind of ratios like inventory turnover ratio, stock ratio, all those kind of ratios are there. So fixed asset turnover ratio. So the firm's efficiency in utilizing the assets will always be known in activity ratio. And that's also an important classification of ratio analysis. And lastly, profitability ratio, which will measure overall performance and effectiveness of the firm. So while you take or analyze a firm's financial position based on ratios, these are the four important ways of classifying the ratios and analyzing them. So with this, in third unit, it's always important to note that you will always get a question to prepare a comparative statement in 5 marks, and also you will also get questions from common size statements. So make sure you are thorough with the format of common size and comparative statements, and you also be thorough enough to differentiate between the two, and also make sure you learn all the formulas that are coming under ratio analysis. So if you learn all the formulas which are coming under ratio analysis, it will be very easy for you to classify them or to identify the items from the balance sheet and do it. And with a small simple classification, you will be able to earn 5 to 8 marks in your semester exams. So with that, we have discussed on 3 main units, and when it comes to the 4th and 5th unit, I will repost the videos of cash flow and fund flow statement and also standard variance analysis so that you will be able to revise it once again. Okay, thanks for watching.